Welcome to the channel Get Rich. Today we are going to look into an analysis of a pharmaceutical company. So if you are new to this channel, please subscribe to this channel, and then if you like this video, like, share and comment. So I always read all of your comments. So if you have any thoughts, please put it in the comment section below. So let's get started. So today we are going to look into analysis of Alembic Pharmaceuticals Ltd. So they have a revenue of about 5,393 crores in financial year 2021, and they have a EBITDA of 1,631 crores, and then profit after tax is 1,178 crores. Financial year 2021 was phenomenal for this particular company. They have 114 years since they founded this company. They have 3 API manufacturing facilities, they have 6 formulation facilities, and they have net debt of 208 crores. And if you look into some of the industry numbers, so according to the economic survey 2020-2021, so the domestic market is expected to grow 3x in the next decade. So according to IBEF, India's domestic pharmaceutical market is estimated at $41 billion in 2021, likely to reach $65 billion by 2024, and it is estimated to reach $120 to $130 billion by 2030. So Indian pharmaceutical exports stood at $20.14 billion during this particular year. Also, if you look into the global auto-injectable market size by 2025, it's going to grow at a CAGR of 17.9% from 2020 to 2025, expected to reach $104.9 billion. Why I'm talking about injectables? So this company is also active in injectables market. So if you look into the market price of this particular company, so they are trading at around 735 rupees currently. So they reached about 1100 all-time high, and with a PE ratio of 16.5 currently, and they have a dividend yield of 1.9%. So if you look at their different business segments, so they have about 31% of their sales coming from domestic market, 69% of their sales is coming from export market. And if you look at their different business segments, so first one is international generics. So they have 54% of their revenue is coming from international generics, and 28% is branded, and 18% is coming from API. And if you look at out of the international generics, they have 74% of the revenue from international generics is coming from America, and 26% is coming from the rest of the world. And if you look into their domestic branded segment, so almost 69% is chronic and 31% is acute. So what is chronic and acute? So chronic is kind of a long-term ailment, or it will come often, and acute is kind of a short-term disease or short-term ailment. So that's the medical definition of chronic and acute. So 69% is for chronic and 31% is for acute. And if you look into their different business segment, as I said, they have generics, they have US business and ex-US or excluding US market. So they have a well-established US front end, they have a strong customer base in US, and they are mainly excluding US business is driven by different partnerships. And if you look into their branded segment in India, so they have a marketing team of over 5,000 field colleagues. They also have diversified portfolio in the branded segment. And if you look into their API segment, so they have 121 DMO filings, and they also have in-house API development with vertical integration for selective formulation products. So let's have a look at their international formulations. So they are present in US, Europe, Canada, Australia, Brazil, South Africa and other markets. So they have diverse products, they have several long-term relationships with different customers. And if you look into their manufacturing facilities, they have in Gujarat 3 manufacturing facilities, and they also have 3 R&D facilities. And if you look into their existing products, they are active in oral solids and dermatology. Recently they are adding to oncology, general injections, new oral solids, oncology injectables or ophthalmic. So they are entering into several of these particular segments. And if you look into the analyst expected growth for the next 2-3 years, they are expected to grow about 4% CAGR for the next 2-3 years. So they don't have a very good growth in particular international formulations, because they are facing a lot of pricing pressure in the US generics business. So it's going to be difficult for next 1 or 2 years at least for them. And if you look into their US generics from quarter 2 financial 2021, the revenue is reduced 40% in quarter 2 financial 2022, mainly because of their pricing pressure that's happening in US. They are having some difficulties in US. So they have approved ANDAs, 150 ANDAs, and then if you look at the revenue of last 5 years, they increased nicely, 24%. But they have a very good year in financial 2021. They have a very good margin. Their margin is also going to drop in the next 1 or 2 years because they had an exceptional margin in this particular year. So they also mentioned they have an increase in competitive intensity during this year, which leads to price erosion in some large products. That's why they are facing this particular issue. They're also going to launch 7 to 8 products in H2 financial 2022. And if you look at the excluding US generics, they maintained the previous quarter growth, and also they are growing at a CAGR of 25% for the past several years or past 5 years. But also, it's going to be muted growth for the next 2 to 3 years in this particular segment. And also, if you look into the domestic branded segment, which is they are mainly operating in India, so they have products in cardiology, anti-diabetic, gynecology, gastrology, ophthalmology, orthopedic, dermatological, anti-infective, cold and cough. So they have a lot of these products in these different therapies. And if you look into their growth for domestic formulation, they are going to have a very nice growth in domestic formulation segment. And then if you look into their domestic branded segment quarter over quarter, they increased almost 23% quarter over quarter in their domestic formulation business. And as I said, they have 18 marketing divisions with 5,000 plus marketing team. So they have a 19% product portfolio in the national emergency medicine category. It caters to around 2 lakh doctors in India. So they have a manufacturing facility in Sikkim. So they have 3 brands in top 300 and also their market share is about 1.5% of Indian pharma space. If you look at their API business, it reduced 9% quarter over quarter. For the past 5 years, they are growing at the CAGR of 11% in API segment. If you look at their different manufacturing locations, they have mainly different manufacturing locations in Gujarat. They have dosage forms of general oral solids, injectables, and general injectables, ophthalmic, and they also have several dosage forms in these different manufacturing locations. And if you look at their market share in different therapies, for example, they have in cardiology 1.8%, gastrology 1.4%, gynecology 2.5%. Their highest was I think 2.5%, which is in gynecology, and the lowest was about 0.2% in dermatological. So they have as a average they have 1.5% market share overall. And if you look at their different ANDA filings, they have about 139 ANDA approvals in financial 2020 to 2021, so including 16 tentative approvals. And also they have 92 product launched so far in USA. And if you look at the domestic branded segment, so they have about 8 DMF files, so 117 DMF filed total, so 8 filed in this particular financial year. So if you look at their R&D segment, so they are investing significant percentage of their money in R&D. So they are doing about 12.4% R&D expenses as a percentage of sales. They are also diversifying their portfolio. So in financial 15, they only had oral solids and NCEs, and now they have oral solids, injectables, oncology, dermatology, ophthalmology. So they are diversifying their portfolio. And if you look at their ANDA filing year over year, they are filing roughly about 20 to 30 filings each year. And if you look at their financial statements, they're doing very good revenue growth, EBITDA margin is growing. Their financial year 2021, look at the margin, so they did about 30% EBITDA margin. I feel this is the peak, and their EBITDA margin is going to drop. That's what analysts also expecting, and they also guided their EBITDA margin is going to drop in the next 2 years. So that's going to affect the bottom line. So they are going to face some fine because of the price erosion in USA, as I just explained. So they have profit after tax of about 1,178 crores, and that's going to reduce for the next 1 or 2 years. And their profit margin is also high. It's also going to reduce. So they are also doing increased R&D spend over the years. If you look at their year over year growth, so in financial year 2021, they are doing about 5,393 crores. In financial 2011, they did about 1,200 crores. If you look at the net profit, they increased from 85 crores to 1,178 crores in the past 10 years. That's phenomenal. But if you look at the financial 2022, their net profit is reduced to 877 crores, and if you look at their operating margin, it reduced from 29% to 23%. So next 2 years they are going to face this difficulty, I think, before next cycle comes. So they're also doing some capacity expansions, mainly for US products, I think. And if you look at the balance sheet metrics, so their return on capital employed is 41%, return on equity is 23%, and also they are increasing their capital expenditure. Their debt to equity ratio, they reduced their debt to equity ratio to 0.1, that's very good. And they also have a very good interest coverage ratio. They have a current ratio of over 2, that's very good numbers. These metrics are really good. If you look at their balance sheet, they have about 7,135 crores in September 2021, and they have reserves of about 5,148 crores. So that's also good. And if you look at the analyst expectation, as I said, they were doing phenomenally 27% CAGR for the past 5-6 years, and analysts is expecting revenue to, or profit after tax or bottom line, to drop 13% CAGR for the next 2 years. So analysts are expecting their revenue is going to drop, so their EPS is going to drop from 59.9 to almost 35.9 this year, and then increase slightly to 45.6. So their revenue, or their mainly the bottom line, because of the margin and price erosion in USA, their margin is going to drop. Because of the margin dropping, their bottom line or profit after tax is going to drop for the next 2 years. And if you look at the shareholding pattern, so promoter holds quite steady, about I think 70%. And if you look at the mutual fund holdings, they reduced and then now slightly increased. FIIs are selling this company month over month. And if you look at the different mutual funds, they bought this particular company in August, September, October, November. They sold in December slightly. If you look at the different mutual funds which hold this particular company, so DSP Midcap Fund Growth, HDFC Midcap Opportunities Fund, Tata Equity, and DSP Tax Saver Fund, IDFC Sterling, IDFC Core, UTI, DSP Healthcare, ITI, and ICICI Prudential. So mainly these companies are holding, these mutual funds are holding this particular company, and they increased, few of the mutual funds increased their shareholding in October and November, and a few reduced their holding in December. And then if you look at the valuation, so they are trading at around 16 PE now. So they historically they reached even 30, and then the average PE of about 20. And also if you look at the price to book, it reduced from 8 to almost 2.5. That's pretty cheap if you look at the historical valuation. If you look at the revenue projection, so it was 5,393 crores in 2021, 5,200 crores in 2022, and in 2023 they can go back to 5,900 crores. And if you look at the net income, it's 1,178 crores in 2021. In 2022 it is expected to do 877 crores. In 2023 it is expected to 920 crores because of reduction in EBITDA margin. And if you look at the 1 year price target with the current PE, which is 771 rupees, with the price cumulative growth of 5%. If you look at the average PE, which is 20, historically even it reached 30, but if you have to be conservative with the average PE 20, then the price target would be 934 rupees with the price cumulative growth of 27%. If you ask me if I will invest in this company, so I will not invest in this company. Maybe it's good time to enter, because in next 2-3 years it's going to have a muted growth or drop in growth, and then it can come up at some point. So in 1 or 2 years it's going to have not a lot of price action, but then if you can start accumulating this company, it can do well in 4 or 5 or 6 years. But for the short term, it's not going to be profitable, and the growth rate it's not favorable for me. So I would always go for a company which grows year over year 20+%, and then doing phenomenally good, and which I can completely understand, the companies which I can completely understand, and they are doing phenomenally good growth, and which I can easily project and see growth for the next years. So personally I will not invest in this company. That doesn't mean this company is overvalued, because if I see this particular company, it's not overvalued. It's a bit undervalued, I would say. But personally I will not invest in this stock. So that's my personal opinion. It's not a financial advice. So it depends on what kind of investor you are. You can either go ahead and buy, or do your due diligence. So personally, I am a growth investor. I would like to invest in a company which will be constantly growing year over year, with a very good visibility of growth. So thank you for watching, and if you like this video, like, share and comment, and if you're a new subscriber, please subscribe to this channel, and if you have any thoughts, please put it in the comment section below. And if you want to subscribe for my free newsletter, you can also subscribe in the link below in the description. So thank you for watching and have a nice day. Bye bye.